Hey there, Tiffany Thomas with WealthyTiffany.com, and in today's video I'm sharing with you how I purchased my first stock. So I purchased my first stock on August 3rd, 2012, which was Netflix. And it was right when Netflix had taken a really big dip, so I bought it for $7.70. I took about half of my savings, so just over $20,000, and bought 2,600 shares of Netflix. I recently sold all of those shares on February 20th of this year for a stock price of $386. So if we do the math, we can see that I am a millionaire now, all because of buying my first stock less than 8 years ago. Okay, maybe that's not how it went down. Netflix was actually not my first stock, although I do own Netflix and have made thousands off of it. But hindsight is 2020. If only we knew what all of the stocks were going to do over the years, then we could all be millionaires together. Unfortunately, that's not how it works. So I want to share some things I did right when buying my first stock and some things I did wrong and how I do it now so that you can be better at buying your stocks. All right, if you're ready to dive in, click that like button and we're gonna get started. Shortly before I bought my first stock, I had no idea actually how to do that. It wasn't nearly as popular as it is now. But I knew I wanted to buy some stocks. I had a few friends that were really successful with it, and I had extra money to invest, and I really wanted to grow my wealth in other ways. I did ask a few of my friends how they had bought their stocks, but I wasn't really sure what questions to be asking because I really didn't know anything about it, and I didn't want to seem really stupid. So I went online and looked at a few different blogs and gathered some information that way. But I did ask one of my friends which brokerage company she used. I didn't actually know it was called a brokerage company then. So I basically just said, how do you buy stocks? Like, what are you using? And she told me that she uses the brokerage company Capital One because that's where she had her savings account. So it made it really easy to transfer money over to her brokerage account. And she seemed to like the platform and the prices were pretty good. And I thought, oh, all right, I have a Capital One savings account, so that would be really easy for me to set up a brokerage account with Capital One as well. And one of the things that I did learn was to find a brokerage company that charged really low commission fees. And honestly, most companies no longer charge this commission fee, so it's not really that important. But back then, most, if not all, companies were charging a commission fee. And it was just a one-time fee that they would charge when you would buy or sell a stock. So you wanted to make sure that was kept really low so you didn't pay a lot of extra money to purchase your stock, especially if you were only buying one share. And Capital One had a commission fee of $6.95, which was pretty low. Some of the other companies were charging $8, $9, or $10, and one other was charging $4.95. So I felt pretty good about the $6.95. But going forward, Capital One has actually gotten rid of their brokerage account. So I moved my brokerage account over to Ally Invest, ALLY. And they don't charge a commission fee at all to buy or sell stocks. So I would actually recommend that company or even Vanguard. That's where I have my Roth IRA and a traditional IRA, but they don't charge a commission fee to buy or sell stocks either. So honestly, I would look for a company that is more established, that has been around for quite a while, and that also offers other things that you might be interested in. For example, Ally still has their checking and savings accounts, and Vanguard offers, like I mentioned, the Roth IRA or traditional IRA or even custodial accounts. So you could set up accounts for your children or even your nieces or nephews and get them started with investing. And the reason I suggest going with a more established company is because of what we have seen recently with Robinhood. When the stock market took a huge dip, people were not able to buy or sell during that time. Robinhood's site had gone down. So when you're working with a newer company, things like that could happen. So that's why I recommend going with a company that has been around for a longer amount of time. And with Vanguard, you can also buy their index funds or ETFs without a commission charge. So if that is something you're interested in investing in, I would take that into consideration as well when you're looking for a brokerage company. And if you're interested in learning more about index funds, mutual funds, and ETFs, I do have a video that I created, so I will put a link below in the description and you can check that out. And if you already have a brokerage account that you are using, comment below and tell me which one you're using and why you like it. All right, back to my experience of buying my first stock. Now that I decided where I was actually going to purchase the stock from, I needed to decide which stock to purchase and how much to invest. I was a little scared to do this, so I thought I could just start out with just a few $100s, and then I would become more comfortable with investing in stocks and I could go up from there. I was thinking it would be really great to find a stock that was low priced and would increase in price pretty quickly, like everyone wants to do, right? Hence the Netflix example from the beginning of the video. So what did I do? I went back to the blogs and websites that I had looked at before and started diving into how they were choosing stocks and which one could give me a stock recommendation. And I found one. And unfortunately, I can't remember which blog it was from, but he went over the process of why he chose this stock and why he thought it was going to rise in price pretty quickly. So I thought, great. I had actually never heard of the company before, but I thought, this website seems legit. He seems to know what he's talking about. And it was only about $22 to invest in the stock. So I thought, why not? I can buy one share of this stock and see how it goes. The stock that he recommended has a ticker symbol of EBS. It's Emergent Biosolutions. And maybe you have heard of the stock because they are actually working on a treatment for the pandemic that's going on in the world right now. But back then, I had heard nothing about this stock. So I went strictly off his recommendation and bought the stock for $22.40 plus my $6.95 commission fee. And this stock has risen in price to $61.17 as the filming of this video. I bought one share of this stock on December 3rd, 2013 for a total price of $29.35. And I still have this stock today, so it has doubled in price over the period of about 8 years, which is pretty good. And I'm not going to sell it because it's a good reminder of what I'm not going to do when I buy stocks. After I had bought my first stock, it felt really good knowing that I actually did it, but I also didn't feel like it was the best way to buy a stock. So I started talking to my friends again and asked how they chose their stocks. One of my friends said that she invests in companies that she actually uses their products. So I started thinking, okay, which products do I use and are they on the stock market? One of the things that I really loved was shoes. I had a lot of shoes and I still have a lot of shoes, not quite as many as I used to. And I don't buy nearly as many pairs of shoes as I used to. But one brand of shoe that I really liked was Steve Madden. I invested in Steve Madden for $36.03 plus my $6.95 commission fee for a total of $42.98 on December 18th, 2013. And today that stock would be worth about $50. But if you were to actually Google the price of Steve Madden, it would not show $50. But the difference is because of the stock being split, which I'm not going to talk about in this video. And then I thought I need to ask my other friend. He seems to be really successful with investing in the stock market and investing in real estate. So he must be a good investor overall. And I asked him how he chooses his stocks. And he said he also buys companies that he's familiar with, but he likes to have a little more risk. So he'll buy even newer companies that may have that quick jump in price. And I thought, okay, he has his own strategy. And I decided to ask him what his favorite stock was. And he said Marriott. He loves to travel all of the time and mainly stays at Marriott's. So I thought, okay, that sounds like a good stock. I'll buy that. So I also purchased this stock in December of 2013 for $47.89. And now it is priced at about $79, but earlier this year it was priced at $140, so I'm sure it will continue to rise over time. You know, no one is actually staying at a hotel right now. And after going through this process, after purchasing my first few stocks, I thought I really need to decide on my own strategy, what is going to work for me and what I feel comfortable with. So the way I buy stocks now is choosing companies that I am familiar with, not necessarily ones that I actually use, but most of my friends may use, or it is very popular and the company is more stable. It's not a brand new company and they seem to have the potential to continue to grow over time. They're comfortable adjusting with what's going on in the market so they can continue to be a successful company over time. And I take a more long-term perspective. I'm not so much looking for the hot tip of the day to make money really fast and then cash out my stock. I am more about, okay, what's a good stable company that is definitely going to grow over time that I can hold for the long term. So another stock that I bought was Facebook. That was a company that I was using and a ton of my friends were using and a lot of people were getting on board with Facebook. And I thought, you know what, they have a pretty good potential to grow their company. And I had no idea how much they would actually grow. But it seemed like a good investment to me, and I am glad that I invested in Facebook. And I've bought other stocks using the same method over time, and I have seen such a high return, over 100% return on my individual stocks. I really like investing in individual stocks. Yes, there is more of a risk, but the return you can get is greater. So I don't mind having that greater risk because of the greater return that's possible. But I don't have all of my investments in individual stocks. I actually invest in a total stock market fund. It's actually the Vanguard Total Stock Market Fund. So this helps to decrease my risk of investing in individual stocks, because I know that the total stock market fund will continue to rise over time with the stock market, and companies that aren't doing good will be taken off the stock market and new companies will be added on, and I don't have to worry about that. I can just keep investing in the fund, and it's a great long-term investment that I don't really have to keep my eye on. Whereas with my stocks, I have to keep my eye on those stocks and make sure that the companies are still doing well, that the original reasons I had purchased those companies are still true today. So if I think a company is no longer going to grow over time or be a good stock over the long term, then I cut my losses and I sell that stock and I invest in something else that I think is going to give me a great return over the long term. So it's important when you are investing in individual stocks to keep an eye on them and make sure the original reasons you have purchased them are still valid today. Otherwise, cut your losses and invest in something that is going to give you a greater return. As you can see, I did not become a millionaire by purchasing my first stock, but I have learned a few things over the years and am a lot more comfortable with my investment strategy now than I was when I purchased my first stock. But it was important for me to get started and actually purchase that first stock, even if I didn't do it correctly, because I knew I could learn and do it better over time. And like I mentioned, one important thing that I learned was keeping that long-term mindset. As we've seen recently, the stock market took a huge dip, but I did not sell off all of my investments or any of my investments. I actually invested more in the stock market because stocks were on sale, and I knew those companies would continue to rise over time because they're good companies and the reasons that I originally invested in them had not changed. It was just things in the economy that had made their stock price fall. So keep that in mind when you are investing in individual stocks, that things in the economy may make that stock price fall, but it doesn't mean it's a bad company and that you need to get rid of it. Continue to keep that long-term perspective. And if you have already purchased your first stock, put it in the comments below. Tell me what your first stock was and why you actually bought it. All right, if you like this video, please hit the like button and share it with someone else who would like to hear this information. And please hit the subscribe button to subscribe to my YouTube channel. That will really help me out and we can get this content out to more people. And don't forget to hit the little bell to get notified on when I post new videos. And if you're interested in getting 2 free stocks right now, since this is what we're talking about in the video, Webull is doing a promotion. If you open a free brokerage account and deposit at least $100, you will get 2 free stocks. So I will leave my referral link below. You can click on that to get your 2 free stocks. Thanks so much for watching. I'll see you in the next video.